Stimulus spending grilling. That will happen in about an hour and a half. Federal Reserve Chairman Jay Powell and Treasury Secretary Steven Mnuchin are set to testify before the Senate Banking Committee today. They will do so by video conference. They will speak on coronavirus relief efforts, including their respective emergency lending programs, totaling $500 billion and the $530 billion Paycheck Protection Program. Chairman Powell, in prepared testimony, will confirm that the central bank plans to use, quote, its full range of tools to support the economy, after saying on 60 Minutes Sunday that the Federal Reserve is not considering negative interest rates. Joining me right now is National Economic Council Director Larry Kudlow. Larry, it is great to have you this morning. Thanks so much for joining us.
Thank you, Maria. Pleasure.
Let me start with give us a status check, Larry. I want to talk to you about Chinese companies and what's going on in terms of their listings and their accountability. But let's start with this testimony coming up and where we are in the economy, all of the stimulus that has been thrown at the economy. Do you believe it will work to actually lead us out of this and see growth in the second half of the year?
Well, look, I don't really consider what we've done stimulus. I think it was a rescue mission. Cash, liquidity, try to stabilize the situation. It's a lot of money, $3 trillion on the budget, some tax cuts, but mostly spending cuts. Federal Reserve, roughly $4 trillion in lending programs. Actually, the Fed's balance sheet, Maria, is up about $2.5 trillion. M2 is growing over 20% year on year. But these are stabilization efforts. And I think you'll hear that from Secretary Mnuchin and the Fed Chairman Jay Powell. Looking ahead, you know, we're going to have a very bad pandemic contraction. That will be reported for the current quarter. There's no question, a lot of pain, a lot of heartbreak in those numbers. You've seen it in the unemployment rate. We'll probably have perhaps another month of it to go. But having said that, I think now we move into the gradual phase-in of reopening. I think 48 some odd states. The big three car makers are have opened this week. That's a big sign. I've got some glimmers of hope to report. And I think the second half can be very strong. And I think 2021 can be even stronger. But I think we're going to have some growth-oriented, incentive-oriented deregulation, tax cuts, supply-side policies to get America back to its fullest potential. The president built it once. I think he can rebuild it again.
What are some of those incentives, Larry? I know that you've talked a lot about a payroll tax holiday. Is that critical? What else?
Well, that's one of them. Payroll tax holiday could be very, very important. The president has said publicly he's looking at the possibility of a capital gains exclusion for companies, for anybody that might buy assets, whether they're companies, buildings, factories, or whatnot. There'd be exclusion from capital gains for several years. He's looking at deductions, tax deductions for restaurateurs. They were in yesterday. We had a very positive discussion. We're looking for various incentives for offshoring, full expensing, maybe a cut in the corporate tax rate, maybe targeted tax credits, because we've learned we can't trust China in situations like this. And, of course, we're looking at the fencing off or shielding liabilities related to COVID-19 for restaurants and all businesses, for that matter. Now, the package has not been decided. There's a brisk discussion going on in the White House and meeting with the president and so forth. But those are some of the things that he himself has mentioned.
This is a really important package that you mentioned, and what we've talked about on this program is more flexibility in terms of the PPP. Restaurants, hair salons struggling to cover the essential expenses, and you've got that 8-week period. Do you support those changes? I know it's a congressional move that they have to act on this, but do you support loosening up the 75-25% rule and the 8-week rule?
I want to wait and see on the discussion for the 75% rule. I'll leave that to Secretary Mnuchin. We did talk with the restaurateurs yesterday about extending it from 8 weeks to 24 weeks. The president thought that was a very sensible issue. We haven't committed on it. I don't know if it requires new legislation, but it may. So I'm going to leave that. But I know the president said that's a pretty sensible ask, the extension to 24 weeks.
I want to get to China here, but Larry, let me ask you this before I get there. Is there any way the unemployment rate could be below 10% by September? No, right? I mean, you said growth in the second half of the year.
Well, look, the Congressional Budget Office has put out numbers that show a very significant rebound, about 20% in the second half of the year. Will the unemployment rate get below 9%? I would say it's a possibility, Maria. I think you've got, if you look at the terrible unemployment claims, all right, again, very bad hardships stuff, but I think about 80% of them, 80% of them, Maria, are scored and reported as temporary layoffs. So I guess my point here is, if as the economy opens, and it's opening, I think, at a fairly good pace, that's for May, probably go into next month, June, we probably will see a lot of people go back to work. And I know the president wants to see those folks that do go back to work should get a 7.6% cut in their payroll tax, so their after-tax income and take-home pay goes up. So we'll see on those forecasts.
So let me ask you about China. China has raised as much as $3 trillion or more in our equity and debt markets in recent years, Larry. Now we have news this morning about restricting Chinese companies. NASDAQ reportedly set to unveil new rules on IPOs, a move that could make it harder for some Chinese companies to list on its stock exchange. When I spoke in my interview with the president last week, I asked him about the tougher rules, in particular how he is trying to pull back the money in the thrift fund allocated to the Chinese companies. Watch this. Will you go one step further and force that Chinese companies have to follow accounting rules if they want to be listed on the New York Stock Exchange and the NASDAQ?
We're looking at that very strongly, but on the thrift fund, it's run by the Obama appointments, right? And we said, you got to do this, and we're going to find out whether or not they're going to do it very soon. And if they're not, we're going to replace them very quickly. And we are looking at your second part of your question. We're looking at that.
President Trump, of course, moved to block the federal retirement money from investing in Chinese equities. Larry, tell me about what the path ahead looks like. Are you going to push for more accountability from these Chinese companies listed on NYSE and NASDAQ?
Well, we have to. We have to for investor protection, and we have to for national security. National Security Advisor Robert O'Brien and I wrote a letter to Gene Scalia at the Labor Department, who sent it on to the Thrift Savings Plan, the Retirement Board. The president directed him to stop this new fund that would have, for the first time, put Chinese companies in. I mean, look, whether it's the SEC or the Public Accounting Board or a number of credit agencies, we have learned that Chinese companies are not transparent. They do not meet the norms, the regulations, the usual blue sky laws. A lot of these companies, by the way, are involved in Chinese military efforts to the detriment of the United States. A lot of these companies, by the way, have already had scandals and cost investors a lot of money because of their failure to be transparent in their reporting. The Chinese government forbids that kind of transparency. And what's more, again, we can't ask military retirees to invest in Chinese companies that are operating against our own interests. And in some cases, with respect to this pandemic, we saw the president wrote an excoriating note to the World Trade Organization. China and the WTO were complicit. They lacked transparency. They lacked information. It looks like there was collusion for a cover-up. That means, with respect to the government of China and the companies in China, the potential for various lawsuits and overall penalties, financial penalties. And until that stuff is sorted out, nobody really can invest with confidence in China. So I'm just saying transparency, openness, accounting rules, not fraud, accounting rules. These are themes that we are pursuing. We start with the Thrift Savings Fund, but the administration wants to protect investors, and we will be studying that over the next weeks.
Do you think you're going to see a response from China? I mean, what if they start selling our debt? How much debt do they own of the U.S.?
I don't believe they'll sell our debt, because those are the crown jewels of their foreign exchange reserves. And, of course, they would lose even more money by doing that. It's like catching a falling knife. So I think I don't expect that to happen under normal market conditions. Look, the solution here is for the Chinese to open up their investment system and to play according to the rules set by longtime authorities in the USA, the SEC being the key and the Public Accounting Board being another key. There are issues here. American accounting firms in China have been warned. There are discussions going on about how they're going to do with this going forward. Those companies themselves are subject to lawsuits for fraud and so forth. So this is a very tough. The solution for China is not to sell U.S. bonds, which would bankrupt the Chinese government. The solution for China is to put some transparency and openness into it, just as I want to refer back to the president's incredibly tough letter to the World Trade Organization that went out last night. He tweeted it last night. Where's the transparency? Where's the information? Why are you colluding with China with respect to a cover-up regarding the virus? All of these things are of a piece.
Really important stuff here, Larry. We so appreciate you joining us to go through it. Thanks very much. It's good to see you, sir.
Thank you. Appreciate it.